Oil prices crashed by 30% following the disintegration of the alliance between Russia and Saudi Arabia. This was the steepest plunge since the Gulf War in 1991. Today, oil continues to trade in the negative territory, having slightly reduced the pace of its decline. The massive drop in oil prices sent the ruble down. Last time on Forex, the US dollar was seen trading at above 75 rubles. Saudi Arabia is planning to boost its oil production next month and lower its official setting prices. It seems that Riyadh is trying to push Russia to return back to the negotiation table. On Friday, the OPEC Plus failed to strike a deal regarding production cuts after Russia refused to support the deeper output cuts proposed by the alliance. This situation reminds us of the events that took place 6 years ago, when during another price war, Brent plummeted from $100 to $30 per barrel. Back then, the Organization of Petroleum Exporting Countries and Russia were forced to form an alliance in order to support the oil market. Today, market participants are overwhelmed by the price crash and expect oil quotes to drop even lower. Meanwhile, Russia's refusal to support the OPEC deal means that the country is following its own strategy, which might push oil quotes to the critical levels. Analysts expect US shale oil production to be reduced in the near future. This may eventually support the efforts of the OPEC and back crude prices. However, the shale production in the United States is still increasing. On Monday, oil was on track to stabilize and reduced its decline, facing 20% losses in the mid-session. Brent futures were trading at $36.25 a barrel, while American crude WTI settled at $32.48. In addition to the OPEC deal collapse, market players are worried about a looming recession due to the rapid spread of the coronavirus. Markets remain extremely unstable and react strongly to economic news and reports about the virus epidemic. The demand for gold is still high, and the stock market is likely to face the downward pressure. In the early trade, the US dollar was seen trading at 75 rubles on Forex. Meanwhile, the Moscow exchange will resume its work on March 10. Following the collapse of the ruble, the Bank of Russia has suspended foreign currency purchases for 30 days. The regulator explained that this measure was necessary amid high volatility in the market and extremely low oil prices. For Russia, the Brent price near $40 per barrel may be quite acceptable. If oil prices hold at around $30 per barrel, Moscow and Riyadh are likely to reach a compromise. The massive drop in oil prices has seriously affected the OPEC producers. It seems that members of the alliance will now be more willing to resume negotiations. You are watching Market News on InstaForex TV channel. Stay tuned with us.